Let's be honest. Nobody knows where crypto prices will go. Nobody knows if Bitcoin will go up, if Ethereum will go down, if the altcoin prices will move in circles. Nobody has an idea where things will go. Nobody knows this for certain. However, there are patterns in the market. And using those patterns, we can potentially derive probabilities. We don't know anything for certain, but we can see what is more likely going to happen. This kind of approach works for pretty much any asset class. We can say, for example, for property, what's now the rental yield on that house? Thus, is the house cheap or expensive? Or what's the PE ratio, the price to earnings ratio of stocks? Is this historically cheap or expensive? And we can have a look at similar kinds of patterns in the crypto market as well. For example, have a look at this. We can use reference prices. For example, the all-time high in Ethereum. What we're seeing here is Ethereum's price in black, and this red area, that's the price drawdown from the all-time high. And there seems to be some kind of a line in the sand that after an 80% drop, Ethereum seems to not fall that much anymore. The same number, by the way, holds for Bitcoin, and it seems to also slightly decrease over time, as in the bear markets tend to become less severe. The recent drop was quote-unquote only 70%, not 80% anymore. Of course, since now Ethereum is close to an all-time high, this pattern doesn't really matter that much in the current moment. But there are some other patterns that very much do matter. Have a look at Bitcoin dominance, for example. So this is a measure of how much of all of crypto is currently in Bitcoin. This oscillator in purple shows us the 30-day percent change of that dominance. So is the dominance currently going up or down? Is Bitcoin becoming more or less important within the crypto market? And currently we are at rather low levels. Or in other words, Bitcoin dominance declined quite quickly at a very similar rate compared to the end of last year. So the magnitude of the decline is very similar. The reason for the dominance decline is very different. At the end of 2024, we saw a lot of speculation on the Solana chain. Many people traded meme coins and the pump.fun ecosystem. That's what caused the Bitcoin dominance to go down. A lot of capital going into Solana. This time it's not Solana, this time it's Ethereum. A lot of people buy Ethereum now because of the treasury narrative. And so a comparison of Bitcoin dominance with Ethereum dominance might make sense. So at the top, we've got Bitcoin, at the bottom we've got Ethereum, and clearly there is negative correlation here, as in when Bitcoin dominance goes up, Ethereum dominance goes down. When Bitcoin dominance goes down, Ethereum dominance goes up. And when we zoom into the recent past, so the last 3 years, we've got our drop. Bitcoin dominance fell by roughly 11% at the end of last year, and this time we are down roughly 10%. And so the big question is, will history repeat itself again? And will Bitcoin dominance bounce? And thus Ethereum dominance potentially come back down again? There is a lot of confusion in crypto with this recent Ethereum rally. Many people think that the altcoins went up as well, that the altcoins were a good investment, that many people bought into the altcoins, but that's actually not true. It is true that the altcoins went up in US dollars. And have a look at the 7-day returns of the top altcoins. They did peak recently, but this was not because of altcoin demand. This was because of the coupling of altcoins to Ethereum. Have a look at the main tokens on the Ethereum chain. They all trade versus wrapped Ethereum, or at least the vast majority of them do. So the price of an altcoin is not just determined by how many people are buying and selling the altcoin, it's also determined by how many people are buying and selling Ethereum. The price itself is just the ratio in the liquidity pool of the altcoin versus wrapped Ethereum. So there's maybe 10 altcoins versus one wrapped Ethereum. That means that the altcoin price is 1/10 of the Ethereum price. If then the Ethereum price goes up by 10% because so many people are buying Ethereum, let's say with fiat currency, then automatically, because of the coupling, the US dollar price of the altcoin is going up to the same degree by those 10%. Really, to see how altcoins are performing, this chart is much more useful. We are removing the price coupling with this chart. This looks at the others dominance, so the market cap of all of the altcoins that are not in the top 10, and puts this in relation to the Ethereum market cap. And again, nobody knows where prices are going, right? We're just trying to figure out patterns. We're trying to figure out what happened in the past, how often did this happen, and what's likely going to happen in the future. And since the middle of April of this year, the altcoins underperformed Ethereum massively. So they tended to go down very, very quickly. But that did not happen in US dollars, that happened just relative to Ethereum. So in US dollars, they still went up, but they only went up because of the coupling. Many altcoin investors took advantage of this Ethereum rally, took advantage that the altcoins also went up with it and sold. But again, back to this chart. What's going to happen in the future? The answer is I don't know, but what I do know is that relative to the trading range that was established 7 years ago, you're rather on the lower end now. So the altcoins relative to Ethereum aren't that expensive. The question then, of course, is what's going to happen? Will Ethereum come back down to reality? Or will the profits that have been made with Ethereum get rolled over to the altcoins? I don't know, but in general, I think that it's not so good to be now heavily in Ethereum. There's simply so much attention on ETH right now. The narrative around the Ethereum treasury companies is simply too strong. And here is that narrative, right? We've got the ETF demand of Ethereum and we've got the treasury reserve companies. The treasury companies are in green, the ETF is in blue, and this is growing quite quickly. Roughly 8% of the entire Ethereum supply is now held by Wall Street. But really, just because there's demand for Ethereum right now through those entities does not mean that altcoins are now a great investment. Because here's the other side of the story. What we see in this chart is the top altcoins combined open interest. Now, what on earth is open interest? It's bets on the price. It's usually perpetual futures, so that's levered contracts on the price of an altcoin, and people are speculating player versus player, where is the altcoin going? And when there's a lot of bets in the derivative market, there tends to be also very high prices. And this is now at all-time highs, right? The altcoins have now a lot of bets in aggregate. Now the problem is that there is strong correlation between the spot market, the price, and the open interest, the futures market. When there's a lot of short-term capital in an asset, there's a lot of short-term leverage in the asset, that means the price is elevated. As attention goes down, as open interest goes down, as less people bet on the price, the spot price tends to also deflate again, all done through arbitrage bots. Let me show you this effect on individual assets. What we've got over here is Cardano, and the open interest is in green. So that's how many bets are currently made on Cardano. This is very, very high, by the way, right now at 1.8 billion. And in yellow, we see the Cardano price. And just have a look at how this correlates. As there are more bets on the price itself tends to go up. As the bets deflate, as there's less bets on the price, the Cardano price tends to follow and also come down. So this is all short-term money that comes in and goes out and creates a lot of volatility on the spot market. Because fundamentally, why do people use those derivatives anyways? Why do people use perpetual futures instead of just buying the asset on the spot market? The reason is that perpetual futures tend to be a bit more liquid. They tend to have less spread, and the transaction fees are very, very cheap. So when we get in and out of assets, using perpetual futures is very cheap. However, if we want to buy and hold over the long term, perpetual futures are very expensive because the funding rates to go long in an asset tend to be pretty high. So for buying and holding, perpetual futures are bad. For short-term speculation, perpetual futures are good. Thus, when we see a lot of open interest, as in a lot of bets on an asset, a lot of short-term speculative money in there, that means that the price can deflate very quickly because people don't buy and hold long-term in the perps. And that's what we see with Cardano. And so that's why I'm not very bullish on Cardano right now. But that's also what we see in any other altcoin. This is Litecoin. Again, just have a look at how the spot price and the open interest correlates. And here in Litecoin, we are also pretty high on open interest. Or have a look at this. This is Dogecoin. It peaked in open interest at roughly 5 billion. That was when the Doge price was at 27 cents. Since then, open interest declined and now the Doge price is 22 cents. And so that's why I don't like that the aggregated open interest across the top altcoins is currently at an all-time high. It's simply a sign of a lot of short-term leverage currently in the market. And that leverage can delever anytime. It appears as if this rather bearish views on most altcoins is a contrarian view. Most people think that the altcoins will appreciate quite quickly in the future. The implied volatility in crypto tends to be rather low, and volatility shoots up whenever prices crash. In general, prices tend to move faster when they go down than when they go up. So when there's low implied volatility, the market in general anticipates rather calm bull markets. But have a look at the options at the money implied volatility. It continues to go down, an extrapolation of what happened in the last 2 to 3 years. Bitcoin simply slowly appreciated and the market expects this to continue. I am also bullish on Bitcoin, but I'm definitely not that bullish on Ethereum right now. As we have seen, Ethereum relative to the altcoins is rather expensive, and the Bitcoin dominance has a good chance to potentially recover in a V-shape, as it did at the end of last year. Have a look at Ethereum's realized price to liveliness ratio. The active investor is quite a lot in profit and might take some of that profit. It's now 1 standard deviation above the realized price. Fundamentally, it's of course great that we've got all the Ethereum ETF demand and the Ethereum treasury companies. The question though is the market reacting to those new fundamentals adequately, or is the market overreacting? And I think an overreaction is actually what's going on. Have a look at how many Ethereum got bought by those strategic ETH reserve companies. The answer is 3.7 million. Multiplying this by the current price brings us to roughly $17 billion worth of purchases. Those reserve companies started buying at the beginning of April, but since then, the market cap of Ethereum appreciated by more than 300 billion. So over here we see 316 billion. So it's 316 billion of value creation on the back of roughly 17 billion worth of purchases. That's almost a 20x. In other words, there's roughly 5% of price appreciation due to the treasury companies and 95% of the price appreciation due to speculative money that are front-running future purchases by the ETFs and by the treasury companies. The vast majority of this Ethereum rally is just speculation. It's not yet direct purchases. And that's why I think it makes sense to rather under-allocate on Ethereum now. I don't have a crystal ball either. I'm just looking at patterns. And the pattern repeated itself several times. When the altcoins were that low relative to Ethereum, something has to give. We either see an altcoin rotation or we see an Ethereum correction. And I think the second scenario is more likely. Now, what we're seeing over here, that's the others dominance. So how much of all of crypto is currently in the altcoins that are not in the top 10? And that's currently close to 8%. And since the beginning of 2022, this is actually going down. And there's a fundamental reason for the altcoins to perform that poorly. And by the way, I expect this to continue to go this way. What we're seeing is a concentration of capital in the heavyweights. So in Bitcoin, Ethereum, and Solana, due to the ETFs and due to the treasury companies. Here's a chart you've probably never seen before. This is the Bitcoin market cap plus the Ethereum market cap plus the Solana market cap relative to the market cap of the smaller altcoins. So when we look at the top 3 cryptocurrencies and we compare them to the smaller altcoins, we can see a clear trend. The big, potentially less risky cryptocurrencies outperformed the risk on assets, the small micro caps, by more than 200%. And for some specific cryptocurrencies, that outperformance is even more pronounced. This here is Balancer relative to Bitcoin plus Ethereum plus Solana. So when we just look at the last 2 years, this outperformed by more than 1,200%. And that's no coincidence. This happens because of fundamental reasons. It's because in this case, the Balancer supply, the supply of the BAL token, went up massively because of token emissions, because of usage of the platform. So platform usage gets incentivized by an expanding supply, and that expansion in supply cannot keep up with the demand, thus the underperformance. Thus, all those bigger cryptocurrencies, Bitcoin, Ethereum, and Solana, did so much better. And so this is just an example of how the mechanics in crypto work, right? Have a look at this again. This is the balancer supply. It keeps on growing because of liquidity mining, and those mined BAL tokens get sold over time. And we've got these effects regularly in crypto. There's an entire website called Tokenomics.ai that's just focusing on the token emissions of various altcoins. Every single week, we see roughly 800 million worth of tokens hitting the market. And the problem is that all of that supply has to get absorbed by the retail investor. And it has to get absorbed faster than the purchasing rate that we see through the ETFs and through the treasury companies of those larger caps. And long term, that's very unlikely going to happen. The issuing rate is just too high. And that's just of the tracked tokens on this website. And so I'm trying to make money where there are market inefficiencies. And I do believe that the altcoins are still inefficiently priced in the way that there's way more selling pressure than there is demand. 800 million is way too much. If the altcoin market suddenly drops by 50%, then this will only be 400 million. And that could get absorbed a bit better. But right now, I really don't see the case how the altcoins can outperform the major cryptocurrencies. There won't be a treasury company for Floki anytime soon. And so the way I make money with those inefficiencies is by betting on rising prices of Bitcoin, Ethereum, and Solana. And at the same time, I bet on falling prices of all of the crappy altcoins. The altcoins that have a very quickly expanding supply that tend to underperform the major cryptocurrencies constantly. I followed this strategy now for roughly 4 years. So this is my personal performance. It's a monthly chart I've pulled out of Microsoft Excel. And had I just dollar cost average into Bitcoin, I would have gotten this light gray return over here. Instead, because I also bet on falling prices of various altcoins, I got the return here in black. I did this mainly with borrowing and lending platforms like Aave, etc. But I recently switched over to perpetual futures, and that also worked pretty well. So I did this here with my personal capital as a first pilot project and turned roughly 40k into 60k in just 2.5 months. And this is where I think I differentiate myself with this channel from all the other crypto channels. Most other crypto channels are not willing to share their actual performance. But I didn't want to stop there, right? If I make money, how can you make money with the same strategy? It's not always that straightforward. So I opened a capital pool 1 month ago. And lo and behold, this pool is also appreciating quite quickly. Not as quickly as the initial test. So annualized, this gives us 61%. But still, the premium members of this channel that are invested in this pool are currently making exactly this return. Now, because there was so much demand for this capital pool, I had to close deposits. So I will continue trading with that pool until end of the year and then open another one at the beginning of next year. But until then, you can still copy my trades. So I share every single trade that I make over here in the Gerhard's trade channel. So for example, over here, I'm not sharing now the recent trades, but here on the 23rd of July, I bet on falling prices of WorldCoin, and various members copy traded and made some money as well. And so I was thinking, how can I set up this membership in a way that it's as risk-free as possible for you? And I came up with the following. If you decide to join the membership here, you just have to watch 2 videos. The first one is this one here, using perpetual futures on Hyperliquid to bet on relative valuations. The second video is over here, risk management with relative valuation bets. So that's roughly 1 hour of content. You're simply just following the instructions explained in those 2 videos. Afterwards, you're joining all the premium groups. Then I get a notification and then I will send to you the one trade that you just have to copy trade, that I have the most conviction in. If with that trade you are not making money after the first month of your membership, then I will refund the entire membership fee to you. So this is the trade that I will share with you. It's not the balancer trade, it's something else. It's something that has more upside potential. And since beginning of the year, it went up by 350%. And yes, there is some potential risk for me that you might not end up making money in the span of a month, but I think the risk is manageable, especially given that the performance recently is accelerating again. And the reason for this outperformance is the exact same as for Balancer. It's an expanding token supply, and the major cryptocurrencies just outperform this asset. And they do this long term because all of that supply, that additional issued supply, hits the market, putting constant selling pressure on the asset. So if we make the relative valuation trade, we can get this performance relatively constantly. And so here's the price for a month. It's currently $125. Again, if you don't make any money in your first month with that trade that I'm sharing with you after you join, you will get that money back. Just message me and I will just refund you, no questions asked. If you want to become part of the next copy trading capital pool, then you might consider joining for the annual membership as well. This is where I share the automated copy trading first. So besides that early access to copy trading, you of course also save some money, $250 per year. If it's your first time here on this channel, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!